kicked on. All right, good morning, everybody. Hey, number one thing I want to say here is thank you to Ed and thank you to Doug for spending the time handling the room yesterday. I really appreciate that very much so. So thank you, guys. All right, let's see. Good morning, everyone. This is Rick with Hit and Run Candlesticks. Today's date is Wednesday, September 4th, 2024. Okay, yesterday was very unfortunate, wasn't it? But that is the life of trading. It is. So what happened yesterday that I see is we had this consolidation box up here that the bulls and the bears were fighting over. You know, who's going to win the battle inside the box? Was the bulls going to win to the upside, or were the bears going to win to the downside? Well, clearly the bears have won here. Well, it looks like we stopped about that 50 period moving average yesterday. That's the blue line. And it looks like today we're opening up near yesterday's close, which means absolutely nothing. It doesn't mean that, hey, we're going to start bouncing and going up. It doesn't mean that we're going to take a breath and then go down. At this point, what we do need to see to go up is we need a bullish candlestick that holds with follow through. Now, we've already have the bearish candlestick. To be bearish, we need the follow through to the downside. Targets that I see on the SPY, I'm just going to simply use this, you know, my quadrant lines here, because my ultimate goal would be to get to that 50% mark right in here. Now, I don't want it to get there. I really don't. Bouncing off that 50 period moving average would suit me just fine. And I do not think at this point we have a big bearish sell-off, not a big bearish sell-off. At this point, I think we just simply have a fact that we ran up a tremendous amount, got into a very overbought situation, and now we're having a little bit of a pullback. Now, there'll be shorts in here for sure. There are plenty of shorts out there right now. But we're going to need to see the overall market show that failure. Probably should do this one in red now. We're going to need to see that failure. And when we start to see that, that'll really turn the shorts on down to 453, 454 maybe, and then 437 here. And this would be the 50% retracement. And then we'll kind of worry about what's going on down here. But right now, I think it's pretty normal. Diamonds are handling themselves very very and yeah, they're handling themselves very well. In fact, that may be what's really the best thing on in the whole market right now for the long sides. We're still holding above the trend indicator, and you know, I'm always doing this right here. I'll do the bullish side first. Price is above the T-line. T-line's above the trend indicator, except that's not true here, is it? Price is not above the T-line, so that is a problem. The T-line is above the trend indicator, and it takes 3 of those to work, not 2. It takes 3. So what we're going to need to see is the bulls step in, and they can do it today. They can do that today. They can also do it tomorrow. They can do it 3 weeks from now, as long as they stay above the trend indicator there. When we start to break that, then that puts everything in that bearish tone. And the diamonds are not immune to a little bit of a pullback. If you look at the run they've made, man, it has been tremendous here. Look at that. Look at that run right there. So a little bit of a pullback, kind of normal. Kind of normal. It really is in all charts. So we'll have to watch that. Qs are a bit of a problem, I think, because they're playing with a blue ice failure here. And right now, I'd be looking at the dotted deuce for a target, and then possibly the 200 down here. Now, I also think that there may be some kind of bullish relief rally in the cards. And whenever that starts, what we want to be careful of is coming up here you know, big bullish, well, let's do that. We have that power, don't we? Let's put this up here. Let's do this. So let's just say for a wild card out there, okay? We end up with a doji today and we put this bullish candle in. Everybody's going to scream Morningstar. Well, that's only bullish if it continues to show follow through. So let's say we come right up here, but then all of a sudden, you know, we get a little, something like that happens. You know, that's no big deal right there. Where the big deal happens is if we can't get through here and then we start to roll over. So what we've got is a failed high, failed high, failed high. One of the important things in trading is having some patience. We might need to wait a little bit and see how the market handles all this. So is this just a pullback to set up to go long? Well, we need that bullish candle to prove that to us and that follow through. And then we've got more follow through to the top side. So there certainly is some crazy going ons out there in the market right now. And yesterday was unfortunate. It really was. But it was probably overdue. Probably overdue. I've got a couple members I posted last night. I did get back in the room here like the last hour maybe of the trading day. And I got a few positions closed out with a loss and took one winner, the IBM trade. I took that off the table. So check on your app or check above there. Above the chat here, and you can see what I closed out. Here's UL. There are still some long charts out there. There really are. Here's UL. We're getting into that, you know, defensive sector. Couple of targets. The first one is simply going to be to break out of this top, 65.89 here, and then maybe up to 67.70 for a target. Run is looking a little short to me. So here, this is not a true dark cloud cover. It's not a true one, but I'm going to respect it anyway. And here we are down. We confirmed going below the trend indicator yesterday. Targets I have is this 118.30. Below that, watch that 50 period moving average around 1670, then 1575 here. And then we've got the 200 and the dotted deuce down here at 14.25. That if the market really started to sink a little bit, run could be part of that. And there's some upside targets. Stop wise, you know, watch for the bullish candle and watch for taking out that green dot or that one, or even down here, taking out the red dot and turning it green. That's what we'll look for. Abbott is one that a lot of people here are still in, and it's working. Even in a rotten market, it's still working. Target is still 115.35, 17.85 up here. These targets have not changed for the past, I don't know, 3 weeks or so, 2 weeks, something like that. They've not changed. They're still there. Procter & Gamble, target 176, 177, we'll call it 60, 179 area here. This would be a good one to do something like this with. Let's do this. And I'm going to come down to about right there. And then let's do this here. If you can do this kind of thing on your chart, it is quite good to do. Edit. Nope, that's not what I want, is it? There's what I want. And just turn that red. I've done this to a few of my charts. So this would be the danger zone right in here. Targets up there. Well, we already talked about that. But that's something you might do a two chart to kind of help you out looking at something. XLE. XLE is forming a wedge in here. I'm waiting for, I would like to see the bullish side of this. And for the bullish side, we're going to need to break out. I'm really not going to care about what goes on in here. That's just street trash fighting around. If you want to get down there with them, go ahead and fight. I'm going to wait for the breakout, the setup, and then we'll have targets at 94, 95, 96 up here. To the downside, I didn't even put targets on there real quickly. Well, number one, it's going to have to get, there's the 500 period moving average right there. And then we'll do that low. Then we'll worry about lower if it goes lower. Pizza's still holding up very well here. This is another one that we did targets on a few weeks ago. It's still working. It's still trending, still hanging in there. Target's still looking good. A&F, not so good. Not so good. Target down here at 129, 121.60ish, 108.50ish. This is another one that for, stop-wise or to be long on, we're going to have to turn those red dots green first. That's the first thing that's going to happen. And that would help set that bottom up. Watch the candlestick. But outside of that, this looks way more short to me than to the long side. NU, this is one of the charts that I posted. I can't remember now. That's holding up very well. This would be the danger zone right through here. Target up here at 1575, then 1650 up there. Nice 12% move to that 1650. Holding up very, very, very well. I've got Lunar here. It's holding up. Nice pop to the upside. It's just trying to get itself together. 595 is going to have to get through all this stuff. 595, then 17.25 up here. Make sure that trend holds. Make sure the trend holds. What kind of time do I have? A little bit more. Chewy has pulled back. We're in the danger zone right at the T-line. This is a buy area, or, we get below that. Might be a stop area for some folks below that red marker there. That's below the T-line. Some folks may have a stop here at the trend indicator. But there's targets to the upside on Chewy. So we've got this morning star popped up. It's pulling back like normal. Market really had a rough day yesterday, but Chewy didn't have necessarily a rough day. Just a simple pullback. Pretty normal. Campbell Soup. Campbell Soup is looking pretty good. This would be the danger area that I would be looking for right through here. So, a stop, somebody's individual stop might be in this area. Target, the main target that I have up here is, or the last target I have, 52.80. Before that, 52.05, maybe 50, around that 52 area here on Campbell Soup. PLD is looking pretty good. PLD is still trending. PLD still needs to break out. I didn't do targets on that one. But PLD is still looking pretty good. MRNS, putting in a bottom down here. Nice long bottom. I'm not interested in till it breaks over that $1.53. Then I could get interested in it. If it breaks over that, it might be showing signs of breaking out of this bottom it's trying to construct here. Let's see. Let's go to a weekly chart. It doesn't do anything for us, really. Yeah, right up through there. And then maybe we get the $1.90 area, then the 232. Yeah, there's plenty of room in this chart. So you never have to be in a hurry down here. You never have to be. Allow it to really work. And then that may do something. Donut, typical rounded bottom breakout. Target 1160, 1250. SPXU. The VIX is trying to pop up a little bit. Clearly, you can see that in UVXU. Kind of a morning star signal down here. Big candle yesterday. Shouldn't be surprised over that. So watch this. If somebody's trading this, watch for that follow through, which it looks like it's doing that pre-market. 200 period moving average is right here at 33.80. If we break that, then we're probably looking at something like right in here. 42.35 is what I would look for. SPXU. Inverse ETFs are wonderful. They really are. Especially for the person with the smaller account. And that's because sometimes when you short, you have to have, a little bit bigger account. And a lot of the stocks to short are a little pricey maybe. But SPXU, what you're doing is you're shorting the SPY by going long in this particular instrument here. And here we had our big candle. So follow through would trigger time to be long this. Over that 50 period moving average with price, trend indicator, and the T-line, that would give us a rounded bottom breakout. Very similar to over here, but it ended up failing all the way back down. So watch that trade. If you're in that trade, be careful that the bulls don't come back in roaring, because it will knock this back down again. SQQQ is another one. If you don't want to short the Qs, you can't short the Qs, this is a way to do it. Trade SQQQ long. Dotted deuce here at 8963, and then the 200 up here. That's basic targets, moving average targets. Price targets, I'll leave the dotted deuce where it is. Price targets, we may look for something in this area right there, 1050. And hey, I made it through all those. There was quite a few of them. All right, again, I want to say thank you, everybody. And again, thank you to both Doug and Ed for filling in for me yesterday. I really appreciate it. So we'll see everybody in about half an hour when the market opens up, okay? You guys all take care. Good trading today. Remember, cash is a position. It really is. Sitting on your hands is kind of cool, too. All right? Later, everyone.